Hey, what's up, everyone? Welcome back to my world of stocks. Now, as most of you are, I'm sure, well aware of at this point, the market has been falling recently as the threat of rising tariffs continues to spook investors into selling out of even the best companies out there, with tons of individual stocks being down 20, 30, even 50% or more from the top. Well, in today's video, I'm giving you guys 5 of my favorite stocks that I'm not only buying myself on this dip, but that I also think will have very little to no impact from tariffs, meaning the sell off will actually be a great buying opportunity for the long term, in my opinion. However, I'm specifically going to leave out dividend stocks because there are even more of those that I'm buying too. So I'm actually going to do a separate video for dividend stocks. So if you like dividends, make sure that you subscribe so that you don't miss that upcoming video coming out very soon. But starting with this one here first, 5 stocks that I'm buying right now on the dip, starting with tariff immune stock number 1. I got to go with Google, what has probably been my number 1 overall favorite stock in the entire market for a while now. And after seeing the price fall by over 20% these past couple months, I just think it's an absolute steal at a valuation that is actually cheaper now than the sector on a PEG ratio basis. Now, why do I call them tariff immune? Well, tariffs are typically placed on physical goods, but Google happens to run their business almost entirely by dominating the internet. Whether it's search with Google, internet browser with Chrome, mobile OS with Android, navigation with Maps, email with Gmail, AI with Gemini and DeepMind, cloud, there's video streaming with YouTube. I mean, the list just goes on. And while they do sell some physical products like their Pixel line of phones, that's really just a tiny piece of their overall business compared to the, monumental sales that they generate from digital advertising. Now, of course, there is always the risk of the economy as a whole tanking, or even the growing threat of Alphabet as a company being broken up into smaller pieces because of how massively large and dominant they are. But as I've said in the past, as a Google shareholder myself, long term, I'm always going to love this business, and I would even love to own each of these individual pieces anyway, like cloud, search, YouTube, Android, whatever else. So I'm buying the stock here as a whole, regardless, because no matter what happens to Google, everything that encompasses them is extremely valuable and attractive at these prices, where you typically see sales and profits north of 300 and 100 billion dollars each per year. And yet, they continue to grow at a double-digit rate. It's absolutely mind-blowing. So long term, I think it's one of the best winners that we'll see in the market. Moving on to stock number 2, though, I'm also buying a little bit more of Palantir, ticker symbol PLTR. And here's why. First of all, Palantir is an AI data management company that has almost nothing to do with tariffs. In fact, in such a shaky economy where tariffs may be, hurting the margins of certain other companies out there, well, guess who specializes in helping those companies run more efficiently, be more competitive, and even save a ton of money by using the power of AI? Well, nobody does that better than Palantir, and it's why their US commercial customer count continues to soar, growing another whopping 73% this past year. And think about this too, guys. With tariffs, companies may look to actually start building some of their products here in the States, right? Well, Palantir actually has a new offering for that too. It's called Warp Speed. It's a manufacturing OS operating system that is powered by AI and specifically adapts to a company's production needs, which is already showing tremendous success. For example, Anduril has already seen a 200 times efficiency gain from using the new software, helping them anticipate and respond to any supply shortages much quicker than ever before. That's huge. And yet, despite all that success, Palantir stock actually crashed this past month, losing over a third of its entire value from the top. Now, granted, it is still up a lot overall, but this recent dip was enough to convince me to buy a little more here, which, if you've watched a recent video of mine, I actually mentioned that, I'm already up a lot on this position in our budget community portfolio. It's still our number 1 best performer. And even more so in my private personal portfolio, I'm up over 400%. So I wasn't exactly looking to buy even more at the moment. However, I recently started a new Roth IRA account on SoFi, and I decided to add Palantir to that account too. So, given the recent dip, I'm going to be buying. Okay, moving on to stock number 3. I'm going with a little bit of a shocker here. You guys are going to be a little surprised, but I'm buying more Amazon stock. And here's why. At first glance, you might think that Amazon, being the largest e commerce company in the world, would get devastated by tariffs because of how many products, are made overseas, like in China and so on. But here's the thing: the bulk of Amazon's profits, of course, come from software sales related to cloud, where they hold number one market share in the entire world. Plus, they also have a growing digital advertising business that continues to steal market share from Google and Meta, turning that dominant duopoly into now a triopoly, which analysts think will continue. They expect Amazon to continue to steal market share. Now that's number one. Number two is that even with the big exposure to retail online, if you think about it, tariffs will likely hurt higher end retailers the most because consumers will turn to cheaper alternatives in that kind of environment. It's a similar trend to what you see, during periods of high inflation. Well, the great thing about Amazon is that they're a marketplace where, thousands of merchants compete on price, with even Amazon themselves oftentimes lowering their price to beat brick and mortar stores. So they'll compete on price there too, and they'll subsidize it, and they have the profits. They're able to do it because they're so big. Now, for example, you go into a store and you search for the same product that you're looking at there in person. You search it on your phone. Chances are very high that that same item or a similar one will actually be cheaper on Amazon, thus resulting in more foot traffic for them online. More people choosing to turn to Amazon to find cheaper prices, for the products that they often buy. Which, by the way, many of those people also want that free, fast shipping. It's hard to go without it once you've had it. And I know I'm a Prime member myself, but for that Prime membership, you got to pay a subscription fee, and that's recurring revenue for Amazon that has really no impact from tariffs either. So even though there would be some overall, impact as a whole, I actually think it wouldn't be nearly as bad as people think for Amazon. And yet, we've now seen the stock lose over a fifth of its entire value regardless. And look, I'm sorry, but you're just not going to get such a great deal like that for a company doing over $500 billion in sales that is still growing by double digits, with also surging profits and nearly doubled last year, without something like this to give it a dip. It's a rare dip that I just think is worth taking advantage of. So that's what I'm doing myself. All right, coming in at stock number 4, though, I'm also adding more C3.ai, what I often refer to as a more speculative, higher risk kind of little brother of Palantir, who, like Palantir, also specializes in using AI software to help businesses run more efficiently. Something that, again, has very little impact from tariffs and is probably even more important during that time because of companies trying to save money. Well, C3 has been doing a great job of this, even partnering with giant entities like Microsoft, Google, Amazon, and more to deliver these AI services to companies, where they saw an increase of 74% year over year last quarter through that partner network, and even a 460% quarter over quarter increase thanks to a new Microsoft partnership through that partnership alone. Now, despite that progress, C3 is still an unprofitable company that will always take bigger damage than most during a market downturn because investors are going to flock over to safer options instead. And as such, we've seen this stock now lose more than half of its entire value recently after witnessing a big surge at the end of last year, but now it's crashing back down. So for me, it's enough of a dip to warrant a little more buying here because, like I've said before, I don't think that this is the next Palantir, but they don't really have to be. And considering some of the similarities, yet Palantir is, a whopping 67 times larger by market cap and 10 times more expensive by price of sales, I just think that it's worth it as a speculative play for the long term. All right, guys. We're going to finish up now with the final pick, stock number 5. It's one that I haven't talked about for a while just because I was really waiting for a good dip, but thankfully we're finally getting one. And that stock is, of course, the mighty Meta, ticker symbol META, who doesn't dip very often, but has recently lost over a fifth of its entire value from the top, leaving a PEG ratio of only 1.2, which is even lower than the sector median of 1.3. And here's why I think that that's very attractive. First of all, you want to talk about tariffs. Well, Meta sells almost nothing that can be tariffed. Now, you might say, wait a minute, Ale, what about those metaverse headsets? Okay, you got me on that one. Maybe their headset costs will rise a bit. But my response to that is also, who cares? Their entire metaverse segment bleeds money anyway. In fact, it's lost them over $70 billion since 2019. So thinking that tariffs is all of a sudden the problem, I think that's being a little foolish. And yet, you know what the crazy thing is though? Because of how insanely profitable they are with their social media apps like Facebook, Instagram, and so on, Meta actually generated over $90 billion of operating cash flow just last year alone, meaning that in 1 year, they basically made enough profit to cover all of those cost expenses related to that metaverse spending from the past 6 years. I mean, it's crazy. And again, those profit generating apps have very little impact from tariffs other than, just the broader economy taking a hit and hurting ad rates. But that's something that you'd have to deal with. Everything in the entire world, every company in the entire world would have to deal with a tanking economy. But tariffs specifically is not something that I think really hurts their social media traffic. If anything, more people are probably jumping on social media to talk about these kind of things. Anyway, even then, you're talking about 3.4 billion people using their apps every single day. That's over 40% of the world's entire population. You're also talking about insane profits. You're talking about future growth potential with the metaverse. And now you even get a cheap valuation too because of the stock dip. So even though there are concerns with any stock in the market right now, I'm still picking up more of this one in particular myself because I think they'll be a long-term winner. All right, guys. I think that'll just about do it for this video. Like I said, we will have another one coming very soon for dividend stocks. So make sure that you're subscribed. You won't want to miss that. There's many dividend stocks that I am in love with right now that I'm also picking up. Plus, I also just want to mention, you know how I talked earlier about a Roth IRA on SoFi? Well, if you'd like to start one too, it's 100% free on SoFi. There's no fees. In fact, they even match your contributions by 1%. So the more you invest, the more free money they give you on a Roth IRA. And if you use my referral link down below, start an investing account on there, you get a bonus $25 of stock too. It's 100% free. I love using SoFi. There's no fees. I highly recommend you try it if you haven't already. And especially if you don't have like an IRA, Roth IRA, you got to stop procrastinating on that. Just make one. The tax savings will be incredible for you long term. So it's a great way of building long-term wealth. Again, I highly recommend it. Link is in the description down below. Anyway, thank you for all your support, my friends. I really hope you enjoyed the video. I hope you're all doing well out there. Good luck with everything going on in the market. I know I'll be here helping you along the way as much as I can. It's all just my opinion. Got to make your own decisions. But, let's talk about stocks together. Let's help each other. Anyway, I'll see you in the next one. Take care, my friends. Bye-bye.